Good evening everyone. Welcome to Banao Bharat's Trading for Living post-market live session. 12th of February, Monday evening. Kind of roller coaster day today for all market participants. I would say a very distinct weakness has emerged in the market, which is not fully visible in the primary indexes like Nifty or Bank Nifty yet, but a very clear bleeding symptoms have been displayed in small caps and mid caps. Primarily the PSU stocks, public sector enterprises as well as public sector banks, both have fallen more than 3% on an average in today's market, and today's major takeaway is on the PSU sector. Before going into that, we will just look into the Nifty charts. Here it is, Nifty on the intraday time frame. The opening candle is a higher high candle compared to the Friday's close. Friday's high was 21,804. Today it opens slightly above Friday's high, marks 21,831 on the board, but you can see here the very first candle has been a very clear sell red signal, and from there on it went on to cut Friday's low also because it had made one new high. There was a play of long at Friday's low, which was at 21,629. From there on it actually made one small bounce. You can see here it did take the support at 21,629, and from there on about 4 candles of green emerged, but it did not sustain, which is a very clear indication at the support levels it attempted a pullback, but it did not sustain and it has failed, which means the markets are not that very strong moving forward. Yes, it has been in the downtrend for last 2-3 days. You can see here the high was at around 22,053 in the last week. From there itself there has been a distinct weakness, but after having made a Friday's low of 21,629, there was good amount of pullback up to 21,800, and today opening candle also opened slightly higher, so there was all an indication that this support should have been held. Today's break of 21,629 on the spot is a critical thing because it attempted a pullback right at the support levels, but unfortunately it was not able to go beyond 21,728. so which is, even though it looks like there has been 100 points pullback, it did not sustain that 100 points pullback on the intraday basis, and it has given up all the gains, and eventually by the end of the day it has closed much below. So the major takeaway on the Nifty or on the primary index is it has been in a small downtrend, but there was some hope on Friday close wherein it made one excuse me it made one bottom, and from there on a good pullback had happened, and today's morning also it showed one critical high, came back to the support levels, and that is where it has given up all the hope on the any further up move in the near term. So Nifty very clearly it has failed, and from now on it will intensify, the downward movement will intensify, and we need to see where it will go and stop next. So coming to Bank Nifty also has been weak since the 46,181 levels. Today has already created a low of 44,633, and on the intraday time frame it has cut almost 1000 points. Very similar story compared to the Nifty. Friday it makes a low of 44,893 and does a good pullback on Friday itself. Today it opens slightly higher, comes down, gives some support. From there on it just breaks, and we can see here it has not held on to any other support levels also and has closed at 44,883. So basically on the index front, both Nifty as well as Bank Nifty shown some promise by the end of Friday's close, but today it comes back to the support levels, does not hold the support levels, and from there on it just gives up and closes near to the day's lows. So that is a major takeaway on the primary indexes. Coming to the big story of the day, that is PSUs, both public sector enterprises as well as public sector banks, which have seen on an average cuts of more than 3%. So is the PSU rally over? Well, if you see how the rally began, there was no change in fundamentals, there was no change in anything in terms of disinvestments or any terms of policy changes or any major changes in corporate earnings, but still there was such a big rally on one small statement by our Prime Minister in the Parliament, wherein he suggested our PSUs are also doing well and people, the market participants, should also look into the PSUs which have been sleeping for many years now. That one positive statement acted as a trigger on all the PSU stocks, and we could see a very quick rally and a very stupendous rally wherein stocks which were did multi-baggers in a short span of 3 months. The statement that came in the early November, and by this early February there was a very big rally in PSU banks, which were little lesser known banks like Bank of Maharashtra, Indian Overseas Bank and some other small banks also, wherein we saw very good movement. These banking stocks, especially the PSU banks, they were sleeping for many years now. They had not done anything. Of course, there was no reason for them to get re-rated because there was no much changes in the earnings side, but still it got re-rated and some of them doubled and tripled, which is now started correcting, which means this, according to me, is a story that is now over. Why? After the correction, will it not again make a comeback once again and start making new highs? I don't think so, mainly because there is not much happening or no major policy changes at the corporate level or at the government level for these public sector enterprises as well as public sector banks. So that being the case, this was some kind of a sector rotation. People were playing on IT, pharma, steel, cement, consumer goods, and suddenly they, based on one statement from Mr. Modi, they took up this PSUs also and they have played it well, and now there is no more participation. The weaker hands will start exiting now in panic, so some more fall can happen, sensing that people have started panicking. When the panic starts, it will not stop immediately. That is a chance for all the waiting bears who will take this opportunity to not put any buy orders anywhere close by to the previous day's close. Market makers anyways know people will come and start selling in desperation, so the buying orders will start shifting downwards. That is the role of market makers. when people want to buy, market makers will inflate the price by not giving the stock at a price which the buyer is willing to buy initially, because of which buyer will, with the FOMO experience, he will start buying at higher levels, and that is how, like, operators or market makers will start placing higher level sell orders, and those are the peoples who are now covering also. And the not so strong hands, like retailers who have bought in anticipation of budget rally or the election rally, they are caught surprised, because much before the election results these stocks have stopped topping out, which means, like, from here on they may not go back to the recent highs even if election dates come close by. So that is the major takeaway. Let us see some of the excuse me, some of the banking charts, especially the PSUs. This is the chart of SBI, made a high of 739, closed at the lows of 709. This is Can Bank, had made a high of 582, and very quickly today's high has been 576, and today it has come down to 547, and the close is very close to the lows. Bank of Baroda also made a new high at 268, closed at 255. And let us see ONGC. It had made a high of 275, currently trading at around 255. This is BPCL, which has made a high of 637. Today it has closed at 592, again closer to the day's lows. Hind Petro has tried to bounce back a little bit. Let us see whether it will sustain or not. It has made a low of 488 and closed at 502. So on the whole, I would like to keep the session short for another 2 minutes. On the whole, the big correction has emerged in mid cap and small caps. The story will very soon get shifted to the primary indexes like Nifty and Bank Nifty. And today the first signs of the fall that will come later has been shown in Nifty and Bank Nifty charts, wherein they come to the support levels, they try to do the bounce back, they do some decent bounce back, but by the end of the day they give up all the bounce back gains and closes towards the day's low. So moving forward, markets movement could be 2 steps downwards and 1 step upwards. Be prepared for that. If you are having a portfolio investment, have a very close watch on the stocks as well as the overall portfolio, and if overall portfolio is in decent green, then do not hesitate to book some profits and sit in cash. There will always be some other stocks which will start some good movement and you can start playing the game once again. So being an investor, you need to wear a different hat. Being a trader, you need to wear a different hat. You should know any stock that you have bought or sold, you should know what is the theme of that stock, whether you are trading or investing, and you should also know what if something goes wrong, what is your worst case scenario and what is your action at the worst case scenario. So if you have pre-prepared with your worst case scenarios, and if markets are anywhere closer to the worst case scenario, then you should not be hesitating to make a decision and get out of those counters. Sit in cash. Cash will always give you confidence to view the market with much clear mindset. Then once again you can enter into the same counter or some other counter wherever there exists some positive opportunities. So having said that, let us wind up today's session. Let us once again try to catch up tomorrow with the market views. Until then, if you are liking the content, do share the content with the fellow traders, subscribe to the channel, come to the channel while the live is happening, and if you have any queries on any of the stocks or the index, or any of, if you want to know any views, you can just put your queries. We will try to address to the best of our knowledge. So have a good evening. Let us once again see tomorrow. Until then, Om Swasti.